It's not obvious to people how they're getting screwed, but everybody knows they're getting screwed. It's the change in the denominator, the devaluation of fiat currency overall, that means you cannot buy as many assets as you could, and therefore your structural savings are worse. Now, with record low interest rates, you now have no chance of making money. Well, not until Bitcoin turned up. Bitcoin was the game changer.
Boom, bam, bop, bada bop, boom, pow.
Hey guys, and welcome to Tropical Crypto, where we give you level-headed advice on the crypto markets.
And that's how, with a few minor adjustments, you can turn a regular gun into 5 guns.
Today we're going to be listening to Raoul Pal. He's a crypto and finance OG. But first, let's get real for a second. We're all getting screwed, or at least we feel that way. For me, there was so much more prosperity 10 or 20 years ago. People could afford houses, cars, and even children. Today we need to be a millionaire just to afford a home. But why is it that way? I'll let Raoul explain. He first talks about Bitcoin and then he gets into the juicy stuff.
Going on. And at that point, I started looking at the chart of Bitcoin versus other assets. And many of you will have seen this in Macro Insiders and also on Twitter. And so what became clear, and this was we're now talking about September, October last year, that Bitcoin had already and was about to outperform every single asset on Earth. So all of the charts of, let's say, Bitcoin versus the S&P, Bitcoin versus the NASDAQ, Bitcoin versus gold, Bitcoin versus real estate, Bitcoin versus anything I could find, any asset. Sure, you can all find a single stock that's done better, but an asset class. Not one asset class on Earth looked like it was going to outperform Bitcoin. I'd never seen anything like that in my entire career. That made me pay attention. And then I put it against the Fed balance sheet. First, I looked at the S&P versus the Fed balance sheet, because the Fed balance sheet is the purest expression of monetary printing. I also use the G4 central bank balance sheets to look at the global printing of money. But let's use the S&P versus the Fed balance sheet. You can see the chart here. The market basically fell in 2008, 80%, and traded sideways ever since in this chart. What's interesting is gold looks similar. So if you look at the chart of gold divided by the central bank balance sheet, it looks similar. And if I look at the chart of real estate versus the central bank balance sheet, it too looks similar. But if I look at the chart of gold, which is the oldest denominator, the form of money, against the S&P doesn't look particularly expensive. A little bit expensive, but not the bubble that we're seeing. And that got me thinking about these relative asset prices and the fact that Bitcoin was outperforming everything. And I realized that I think we're all looking at this wrong, and I certainly had been. What that chart shows, or those charts, is that the denominator, which is not the US dollar per se, but the value of fiat currency in terms of what assets it could buy, because these are all fixed assets essentially, or low supply assets. Anything that was a low supply asset was going up in price, but it was going up in price in dollar terms. But when you look in money printing terms, they were basically holding their own after the massive collapse of 2008. And that intuitively feels right to us. You know, the anger and the frustration and the economic misery that's happened since is a function of that. And that makes sense. Variable inputs like consumer goods and wages were destroyed by this. And that makes sense too. So with your wage, you were able to buy less assets. So if assets are a way to create savings for future consumption, you were able to buy less of them. And so in lies the pension crisis. So in lies the ability for millennials to buy housing. So in lies why the middle classes got holed out.
Ah, the old Fed's printing press, screwing everyone up. This is really important if you're investing in traditional stocks, because if you're only earning 5 or 6% per year, you're probably losing purchasing power, and therefore you're able to buy less things. This is the silent, hidden reason why people are struggling to afford things right now. But what are your thoughts? Do you agree with Raoul, or do you think we're crazy? Let us know in the comment section down below. If you've liked this video, drop us a thumbs up, subscribe to the channel. We're really new, so we appreciate any love you can give, and we'll catch you all on the next video. Cheers.